Yes, people. Good morning, good afternoon, good evening to all South India student. How are you? Hope so you are good. I am also good. So from today, we are going to start with the revision lecture that is applicable for May and November 2023 examination. Now guys, remember one point. Whatever finance bill presented by Nirmala Sitharaman ji as on 1st Feb 2023, that is not applicable for your examination. For your examination, Finance Act 2022 is applicable. Finance Bill 2023 is not applicable. Okay. So we are going to start with the first revision lecture, and in the first topic, we are going to discuss the tax rate applicable for your examination. That is tax rate for the assessment year 23-24. For your examination, your previous year is 22-23, means whatever income earned in the previous year 22-23, you are going to file the return in the assessment year 23-24. So for your examination, your previous year 22-23 and assessment year 23-24. First, we are going to start with the general tax rate, or you can say that normal tax rate. So what is the tax rate in case of individual, HUF, AOP, BOI, artificial juridical person? So here lawmaker says that in case of individual, HUF, AOP, BOI, artificial juridical person, there is a slab rate. Up to 2,50,000 is basic exemption, means up to 2,50,000 there is no tax. 2,50,000 to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. Now guys, in case of the senior citizen, now what is the meaning of senior citizen? Here senior citizen means resident individual age 60 years or more in previous year. So if there is any resident individual and age is 60 years or more in previous year, that person is called as the senior citizen. Now, in case of senior citizen, up to 3 lakh is a basic exemption, means up to 3 lakh there is no tax. 3 lakh to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. But guys, remember here lawmakers mention that resident individual. It means, for an example, there is one person, name is Mr. Lobo. He is located in USA, and suppose his age is 72 years. That person is located in USA, and suppose he is a non-resident, his age is 72 years. Question is that person will be treated as senior citizen or not? Answer is no. That person not treated as senior citizen, because senior citizen means that person should be a resident in India, resident individual is 60 years or more in a previous year, then only that person will be treated as a senior citizen. So for senior citizen up to 3 lakh there is no tax. 3 lakh to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. Now in case of the super senior citizen, now what is the meaning of super senior citizen? Guys, here super senior citizen means resident individual age 80 years or more in a previous year, that is called super senior citizen. In case of super senior citizen up to 5 lakh there is no tax, means 5 lakh is a basic exemption. Now 5 lakh to 10 lakh directly 20%, and more than 10 lakh there is a 30%. Here remember 5% slab rate is not there. In this particular case directly 20%, if income is more than 5 lakh, up to 10 lakh then 20%, and more than 10 lakh 30% is a tax rate. Now guys, here it is mentioned that senior citizen means resident individual age 60 years or more in previous year, and super senior citizen means resident individual age 80 years or more in previous year. Now what is your previous year? Can I say that your previous year is 22-23? And 22-23 means from 1st April 2022 till 31st March 2023 is your previous year. Now remember that if any person is celebrating his 60th birthday, means any person is celebrating his 60th birthday as on 1st April 2023, then also it will assume that he has completed the 60-year age on 31st March 2023, and he can claim the enhanced basic exemption benefit in the current year. What I'm saying that if any individual celebrating his 60th birthday, means he is cutting the cake as on 1st April 2023, then also it is presumed that he has completed the age of the 60 year as on 31st March 2023, and in the previous year 22-23 he can claim the higher basic exemption of 3 lakh rupees. Or any person celebrating his 80th birthday as on 1st April 2023, then also he has completed the age of the 80 years as on 31st March 2023, and he can claim the higher basic exemption of the 5 lakh in the previous year 22-23. So always remember, whenever you celebrate your birthday, that particular age is already attained on the last date. That particular age is already completed on the last day, and here in this particular case, you can claim the higher basic exemption. You got my point or not? Yes. So this is the tax rate for the individual, HUF, AOP, BOI, artificial juridical person, whether it is a resident or non-resident. Now guys, there is a concept of the surcharge. Is such surcharge is applicable or not? Answer is yes. In case of individual, HUF, AOP, BOI, artificial juridical person, surcharge is applicable. If your total income, that is net taxable income, is up to 50 lakh, then surcharge is not applicable. If total income is up to 50 lakh, then surcharge is not applicable. But suppose total income is more than 50 lakh up to 1 crore, then surcharge is applicable at the rate 10%. If total income more than 1 crore up to 2 crore, then surcharge applicable at the rate 15%. If total income more than 2 crore up to 5 crore, surcharge applicable at the rate 25%. And total income more than 5 crore, then surcharge applicable at the rate 37%. 37% surcharge if total income is more than 5 crore. Now, one more point here, guys. Like here we have discussed that surcharge is applicable if total income more than 50 lakh up to 1 crore, 10%, more than 1 crore up to 2 crore, 15%, more than 2 crore up to 5 crore, 25%, more than 5 crore, then 37%. And you have to surcharge, you have to add the surcharge on the tax. So first you have to calculate the tax, and after that you have to add the surcharge. Surcharge means basically tax on tax, you can say that. Now, guys, here try to remember one thing. Lawmaker says that suppose you are having the income from the long-term capital gain under section 112A. Long-term capital gain under section 112A is long-term capital gain from the share market. And guys, you know that 112A is taxable at the rate 10% in excess of the 1 lakh rupees. Or suppose you are having the short-term capital gain 111A. And short-term capital gain 111A is basically short-term capital gain from the share market. And guys, if you are having the dividend income, now there is a one amendment and they have included here LTCG under section 112 also. LTCG under section 112 is normal long-term capital gain, like long-term capital gain on transfer of the house property or long-term capital gain on the transfer of jewelry and all, that is taxable at the rate 20%. So there are 4 type of the specified income. Lawmaker says that on this 4 type of specified income, whatever the amount of, whatever the level of this income, maximum surcharge can be 15%. Maximum surcharge can be 15%. It means, guys, 25% and 37% surcharge not applicable. 25% and 37% surcharge not applicable, whatever the level of the income, even in case of long-term capital gain 112A or normal long-term capital gain or short-term capital gain 111A or dividend income, even it is a 10 crore, 15 crore, 20 crore, then also maximum surcharge can be 15%. It means 25% and 37% surcharge is not applicable on the tax on this specified income. Now I can take one example. All people pay attention. Just remember here, just focus to the example number 4. So example number 4, here total income other than specified income. Specified income is this 4 income: LTCG 112A, LTCG 112, STC 111A and dividend income. So other than this 4 income, your remaining income is suppose 45 lakh rupees. And this specified income is a 3 crore rupees. So total comes to 3.45 crore. So income is more than 2 crore up to 5 crore. Surcharge should be 25%. But guys, on this specified income tax, means whatever tax on this specified income, your maximum surcharge can be 15%. So here surcharge applicable on tax calculated on the specified income, your maximum surcharge can be 15%. And guys, the balance income means other income. Is other income itself is more than 2 crore? Answer is no. Other income is not more than 2 crore. So on other income, whatever tax you will calculate on that also, your surcharge will be applicable at the rate 15%. Now one more example, directly check the example number 13. Now in example number 13, your other income is 3 crore. And your specified income is 1 crore, so total income is 4 crore. So total income is 4 crore. It means I can say that your total income is more than 2 crore up to 5 crore. Surcharge should be 25%. But guys, on specified income, maximum surcharge can be 15%. But on the balance income, is balance income itself is more than 2 crore? Answer is yes, na. Balance income itself is more than 2 crore. It is a 3 crore. So whatever tax on that balance income, here surcharge will be applicable at the rate 25%. Here surcharge applicable at the rate 25%. Or in the other way, or in the simple language, I have mentioned here, all people pay attention, just try to understand here. In case of individual HUF, AOP, BOI, artificial juridical person, if your total income is up to 50 lakh na, then obviously there is no surcharge. If your total income is up to 50 lakh, there is no surcharge. If your total income is more than 50 lakh up to 1 crore, then yes, surcharge is applicable at the rate 10%. If your total income is more than 1 crore up to 2 crore, surcharge is applicable at the rate 15%. So if your total income is up to 2 crore, na, then guys, there is no need to check anything else. Like it is a very simple, very normal. If your total income is more than 1 crore up to 2 crore, just add the surcharge at the rate 15%. But guys, if total income is more than 2 crore, in that particular case, that dividend or capital gain taxable under section 112A, 112 or 111A, whatever the amount of capital gain and dividend, your maximum surcharge on tax on this income will be the 15%. Now guys, your remaining income is other than this specified income. You have to check that remaining income. Is this remaining income itself is more than 2 crore or not? If remaining income itself is more than 2 crore, if remaining income itself is more than 2 crore, in that particular case, on the remaining income tax, whatever, that 25% surcharge is applicable. Or suppose if remaining income, other than this specified income, if remaining income itself is more than 5 crore, then guys, tax surcharge on tax on that remaining income will be applicable at the rate 37%. So you got my point or not? Yes. So what I have explained, all people pay attention. It's very simple. First, if your total income is up to 50 lakh, there is no need to add the surcharge. If your total income more than 50 lakh up to 1 crore, then surcharge applicable at the rate 10%. More than 1 crore up to 2 crore, surcharge applicable at the rate 15%. More than 2 crore up to 5 crore, surcharge applicable at the rate 25%. And more than 5 crore, then 37%. But always remember, like if there is a LTCG 112, 112A or STCG 111A or dividend income, on the tax on this specified income, maximum surcharge can be 15%, not more than that. But guys, remaining income, other than this income, if remaining income itself is more than 2 crore, then on tax on that remaining income, surcharge will be applicable at the rate 25%, or remaining income itself is more than 5 crore, then tax on that remaining income surcharge will be applicable at the rate 37%. Now we are going to start with the tax rate for the company. Now there are two type of company, one is the domestic company and one is the foreign company. Now guys, in case of the domestic company, your tax rate is 30%. But in case of domestic company, if turnover or gross receipt for the previous year 2021 is up to 400 crore, means not more than 400 crore, then guys, tax rate is 25%. So what I am saying that normally in case of domestic company, your tax rate is 30%. But in case of domestic company, if your total turnover or gross receipt for the previous year 2021 is up to 400 crore, means it is not more than 400 crore, then guys, your tax rate will be 25%. In case of foreign company, your tax rate is 40%. Now, is the surcharge is applicable in case of companies? Answer is yes, surcharge is applicable. But surcharge depends on your total income. Obviously, in case of the domestic company, if total income is more than 1 crore up to 10 crore, then surcharge is applicable at the rate 7%, and total income is more than 10 crore, then surcharge applicable at the rate 12%. And in case of foreign company, it is the 2% and 5%. In case of foreign company, it is 2% and 5%. Now, next part is related to the partnership firm, LLP and local authority. Guys, remember, in case of partnership firm, local authority and LLP, your tax rate is a flat 30%, means flat 30% is tax rate. Surcharge is applicable if your total income is more than 1 crore, then surcharge is applicable at the rate 12%. Here 12% surcharge is applicable if total income is more than 1 crore. Now, in case of the cooperative society, guys, if total income is up to 10,000 now, then tax rate is 10%. If more than 10,000 up to 20,000, then tax rate is 20%. More than 20,000, that tax rate is 30%. Is surcharge is applicable? Answer is yes. Here surcharge is applicable, and guys, here there is an amendment. Please change in your book also. And there is one amendment, and that amendment says that now in case of cooperative society, your surcharge will be applicable like a domestic company. And in case of domestic company, you know that surcharge is applicable at the rate 7% if your net taxable income is more than 1 crore up to 10 crore. And total income is more than 10 crore, then surcharge is applicable at the rate 12%. So in the similar manner, on cooperative society also, surcharge will be applicable at the rate 7% or 12%. Now, one more point, guys. First, you have to calculate the tax. In that tax, you have to add the surcharge, and after that, always you have to add the health and education cess at the rate 4%. You have to add the health and education cess at the rate 4%. So in case of all SSC, you have to add the health and education cess at the rate 4%. Now we are going to start with one concept that is called marginal relief. Now, what is the marginal relief? So marginal relief we can understand by way of one example. Guys, there is a one example that total income of the Sri Limited, there is a one domestic company, and that domestic company total income is suppose 1 crore 1 lakh. And here tax rate is 30%. So can I say that on 1 crore 1 lakh, if you calculate the tax, then 30% tax is a 30 lakh 30,000. Is surcharge is applicable or not? Answer is yes, surcharge is applicable because your total income is more than 1 crore. So in case of domestic company, if your total income is more than 1 crore, then surcharge is applicable at the rate 7%. So here I have added the 7% surcharge that comes to the 2,12,100. So total comes to 32,42,100. Now guys, suppose in this particular example, suppose your company income is only 1 crore. Assume that company income was only 1 crore. Then can I say that on 1 crore your tax will be 30%? It means 30 lakh rupees is a tax. Is surcharge is applicable? Answer is no. If your total income is only 1 crore rupees, then obviously surcharge is not applicable. In case of company, surcharge is applicable only if the total income is more than 1 crore. So on 1 crore total income, surcharge is not applicable. So here 30 lakh is your tax amount. Now what happened in this particular case, company has earned 1 lakh rupees higher, means company has earned 1 lakh rupees more. So in this particular case, company says that our income is increase is only 1 lakh. But due to that, your taxes increase is 2,42,100. That is due to surcharge. Here, taxes increase higher as compared to income. Means income is increased only 1 lakh rupees, but taxes increase 2,42,100. That is due to the surcharge. So here, lawmaker says that don't worry about that. We are going to give you the marginal relief. And here in this particular case, can I say that, guys, your income is increased over 1 crore is 1 lakh rupees. And due to that, your tax is increase is 2,42,100 rupees. So here Nirmala Sitharaman ji says that don't worry, we will charge only 1 lakh from you, and 1,42,100 marginal relief we will provide you. Now guys, what you have to do in your examination? So in examination, surcharge, here marginal relief is applicable wherever surcharge is applicable. It means in case of companies, suppose your income is little bit more than 1 crore or little bit more than 10 crore. In case of individual HUF, AOP, BOI, artificial juridical person, your income is little bit more than 50 lakh, or suppose little bit more than 1 crore, 2 crore and 5 crore, because on 1 crore, 2 crore and 5 crore, your surcharge rate is going to be changed. In case of partnership firm, LLP and local authority, your income is little bit more than 1 crore, then you have to check the marginal relief. What you have to follow, all people pay attention, you have to follow this particular procedure. First, whatever your level of income, just calculate the tax on that income. After that, just add the surcharge. And after adding the surcharge, just you have to write that tax on 1 crore rupees. Means suppose that company's income was only 1 crore, then can I say that tax on 1 crore was 30 lakh rupees? And just give that excess income over 1 crore to the Nirmala Sitharaman ji. Plus NTI minus 1 crore. So NTI minus 1 crore is 1 lakh. So just give this 1 lakh rupees to Nirmala Sitharaman ji. So it should be a 31 lakh rupees. Here I am saying that this 31 lakh rupees, this 32 lakh 42,100 is restricted to 31 lakh rupees. So in simple word, I can say that just you have to continue the whichever is lower amount, and here whichever is lower is 31 lakh rupees, and after that add the health and education cess. So here automatically you will get the marginal relief amount of the 1,42,100. Now in the second example, suppose one company and that company income is a 10 crore 2,30,000. So here 10 crore 2,30,000 means income is little bit more than 10 crore, and on 10 crore in case of company, that surcharge rate will be changed from 7% to 12% in case of domestic company. So here guys, first you have calculate the tax on that total income. After that, just add the surcharge at the rate 12%. And after adding the surcharge, here you have to write that this amount is restricted to tax on 10 crore. But remember, whenever you calculate the tax on 10 crore, that time you have to consider at least that 7% surcharge. Because if your income was only 10 crore, then 7% surcharge is applicable. Now, obviously 12% is not applicable, but 7% is applicable. So here tax on 10 crore and plus NTI minus 10 crore means whatever income in excess of 10 crore, just give to the Nirmala Sitharaman ji. So here this amount will come, and guys, after that, whichever is lower, you have to continue. Automatically you will get the marginal relief amount. Now suppose in the example number third, there is a one person, Mr. Sam. Sam income is more than 1 crore. That is little bit more than 1 crore, 1 crore, 1 lakh. So what you will do? First, you will calculate the tax on 1 crore, 1 lakh. After that, you will add the surcharge at the rate 15%. And guys, this amount will be restricted to tax on 1 crore. This amount will be restricted to tax on 1 crore, plus excess income, just give to the Nirmala Sitharaman ji. So tax on 1 crore plus NTI minus 1 crore, and whatever amounts come here, guys, whichever is lower, you have to continue, and balance will be treated as your marginal relief. You got my point or not? Yes. So whenever your income is little bit more than 1 crore in case of company, or little bit more than 10 crore, little bit means 2 lakh, 3 lakh, 4 lakh, 5 lakh, then you have to check. Suppose in case of company, your income is 1 crore 35 lakh, then obviously there is no need to check the marginal relief. But little bit more than that, like limit, wherever surcharge is applicable or surcharge rate is changed, at that place you have to check the marginal relief concept. After that, guys, there is a one section 87A. 87A is a rebate. And this 87A rebate is applicable only in case of the resident individual. So 87A rebate says that in case of the resident individual, if your net taxable income is only up to 5 lakh rupees, means it is not more than 5 lakh rupees, then rebate is applicable at the rate 100% of the tax or 12,500, whichever is lower. So in the practical life, we always says that if your income is up to 5 lakh, then there is no need to pay the tax, because up to 5 lakh rupees, your income is suppose only 4 lakh 80,000. So whatever tax you will calculate or 12,500 lower will be the tax amount. It means there is no need to pay the tax. Now question is that, sir, this rebate is applicable to HUF and all? Answer is no. This is applicable only in case of the resident individual and having the net taxable income is of 5 lakh. Now one more point, sir, is this rebate is applicable only in case of the normal type of income, or even there are some special income, then also rebate is applicable? Right answer is any type of the income rebate is applicable. Even you are having the long-term capital gain 112 or short-term capital gain 111A, or suppose there is a winning income and all, this rebate is applicable. But remember one point here, guys, this rebate is not applicable against the long-term capital gain under section 112A. Long-term capital gain under section 112A is a long-term capital gain from the share market, and that is taxable at the rate 10% in excess of 1 lakh. So against that long-term capital gain, this rebate is not applicable. Against that long-term capital gain, this rebate is not applicable. But other than that long-term capital gain, against all other type of income, is yes, this rebate is applicable. Answer is yes. Now for an example, suppose one person is having a lottery income of rupees 4 lakh. He is having only lottery income of 4 lakh. He don't have any other income. And resident individual, so resident individual total income is up to 5 lakh rupees. How you will calculate the tax? So on the 4 lakh rupees, you will calculate the tax at the rate 30%, that is 1,20,000. Can you claim the rebate? Answer is yes. Here rebate will be 1,20,000 is tax or 12,500, whichever is lower. So here 12,500 will be the rebate, and remaining 1,07,500 will be the remaining tax, and after that you will add the health and education cess. You got my point or not? Yes. Now always remember, whatever the net taxable income is, total income of any person, as well as the net tax payable, that has to be rounded off in the nearest rupees of the 10. Now nearest rupees of the 10 means, suppose if there is a 1 2 3 4, then you have to round it off to the lowest 10, and suppose there is a 5 6 7 8 9, then you have to round it off to the upper 10. You got my point or not? Yes. Now we are going to start with some special tax rate. And guys, in special tax rate, there are some special tax rate for the domestic companies and all. You remember that 22%, 15% and all. So that we will discuss. But guys, there is a first section 115BA. But 115BA is not relevant as of now for the examination purpose also. So you can skip the section 115BA, because in the ICI material also they have not given the provision related to 115BA. Only they have mentioned at 1 or 2 places about 115BA. And in today's scenario, this section, no one will opt this particular section 115BA. But we are going to start with one very interesting section, that is 115B. This is very interesting section. Now 115BAA is one new section that was introduced by the Nirmala Sitharaman ji in the 2019 through the Taxation Law Amendment Act 2019, and it is applicable from the assessment year 2021. Now this particular section says that in case of the domestic company has an option that domestic company can pay the tax at the rate 22%. Means only 22% is tax rate. Normally in case of domestic company, you know that 25% is tax rate or 30%. Normally 30%, but turnover for the previous year 2021 is up to 400 crore. Then in case of domestic company, your tax rate is like 25%. Here a domestic company can pay the tax only at the rate 22%. But sir, this 22% tax rate is applicable for only new domestic company or old also? Right answer is any domestic company. Whether that domestic company is a new company or old company, whether domestic company is engaged in the manufacturing business or non-manufacturing business or service industry, any type of the domestic company, listed, unlisted, private, public, any type of the domestic company can opt this particular section. And sir, tax rate is 22%. Yes, but sir, is tax rate 22% is effective tax rate? Answer is no. In 22% tax rate, you have to add the 10% surcharge always. Always you have to add the 10% surcharge and 4% health and education cess. So guys, effective tax rate will be the 25.168%. Here effective tax rate is a 25.168%. Sir, you are saying that here we have to add the surcharge at the rate 10%. It means, sir, always 10% or only income is more than that 1 crore and all? Guys, here you have to add the surcharge 10% always. Always means even your income even that domestic company income is a 2000 rupees, then also you have to add the surcharge at the rate 10%. If company opted this section, then you have to add the surcharge at the rate 10%. So 22% is tax rate plus 10% surcharge and 4% health and education cess. So simply I can say that your effective tax rate will be 25.168%. Now one more point, guys, here what about sir other head of income? Suppose business income will be taxable at 22%. What about the like house property income, IFOS income? Is that will also be taxable at the rate 22% for that domestic company? Answer is yes. So other head income like house property head income or other sources income, that will also be taxable at the rate 22%. But sir, what about the special rates income? Like LTCG 112 normally taxable at the rate 10%, LTCG 112 taxable at 20%, STCG 111 taxable at the rate 15%, winning income taxable at the rate 30%. What about that special rates of income? Guys, special rates of income will be taxable as per special rates only. Special rates of income will be taxable as per special rates only, but always remember in that special rate you have to add the 10% surcharge and 4% health and education cess. So normally long-term capital gain 112A that will be taxable at the rate 10%, but plus add 10% surcharge and 4% health and education cess. So here sir 22% tax rate is beneficial section. Answer is yes. Now one more point. If any domestic company opted this particular section now, then that domestic company is not required to pay the MAT. MAT is not applicable. MAT means minimum alternate tax. That topic is not applicable if company opted this particular section. Now question is that, sir, when MAT is not applicable, what about the brought forward MAT credit? If there is any brought forward MAT credit, then what will happen with that brought forward MAT credit? Guys, that brought forward MAT credit will be lapse. Because when company opted this section, then MAT is not applicable. So your brought forward that MAT credit will be lapsed. So always it is advisable for the company to first set up the MAT credit and only after that opt this particular beneficial section. You got my point or not? Yes. Now one more point. Lawmaker says that if company wish to opt this particular section 22% now, then company has to surrender some benefit. Means company not eligible to claim the benefit of 10AA section 10AA in the like SEZ. You know that SEZ that 15 years deduction is available. First 5 year 100% of the export profit, second 5 year 50% of export profit and all. So that 10AA deduction is not available. After that additional depreciation under section 32(1)(2)(a) that is not applicable. Now 32AD was earlier there was one investment allowance. Nowadays this investment allowance is not applicable. So just you can skip the 32AD. So what I am saying that first is 10AA benefit is not available. Second is additional depreciation not available. After that 33AB and 33ABA, this benefit not available. Now 33AB was related to the, you know that tea, coffee and rubber development board, and 33ABA is related to the site restoration account. So that benefit is not available. After that under section 35 subsection 1 clause number 2, clause number 2A, clause number clause number 3 or 35 2AA and 35 2AB, this deductions not available. You remember that under section 35 scientific research, we have discussed in the classroom that whenever you made the donation to the Rajni ICU means Research Association Institute, college or university for the scientific research or social statistical research, 100% deduction is available. That deduction is not allowed. Or any donation is made to Indian company engaged in the research and development for the scientific research, that deduction not available. Any donation is made to the IIT National Laboratory, 100% deduction is available, that deduction not available. So in simple word, you can remember that under section 35, whatever donation based deduction was there now, like in-house research if you are doing and incurring the expenditure for the in-house research for the revenue or capital nature, under section 35(1)(1) or 35(1)(4) that is allowed. But whatever donation based deduction was there, that donation based deduction is not available if company opted this particular section. One more point says that section 35AD deduction not available. 35AD that 14 specified business, cold chain facility, warehousing for the agriculture produce, warehousing for the sugar, that slurry pipeline and hotel, hospital and all. So 35AD deduction not available. 35CCC and 35CCD deduction is not available. That is agriculture extension project and skill development project. That deduction is not available. Now guys, any deduction under chapter 6A is not available. Any deduction under chapter 6A, under chapter 6A there are various deduction like ATG, ATGGB, ATGGC and all, that any deduction under chapter 6A is not available. But there are three exceptional cases. This three deduction can be claimed by that domestic company, even that domestic company opting this beneficial provision. And that three deduction is, one is the 80JJAA, one is the 80LA, and one is the 80M. 80JJAA is related to the new employee recruit. Whenever you recruit the new employee, then whatever salary paid to the new employee for the 3 years, you can claim the 30% deduction of that salary. That is allowed. 80LA is related to IFSC located company. If company is located in the IFSC, then 10 years they can claim the reduction under section 80LA. And 80M is related to the intercorporate dividend. Means domestic company received dividend from the other domestic company or foreign company or business trust, then they can claim one deduction under section 80M. So this three deduction can be claimed by company, but other than this three deduction, any deduction under chapter 6A is not available to that company. You got my point or not? Yes. So what I'm saying, that all people pay attention. If company opted this beneficial provision of 22%, then company has to surrender sub benefit. One is the 10AA deduction, not available. After that, additional depreciation not allowed. 33AB, 33ABA not allowed. Scientific research donation related deduction not allowed. 35AD not allowed. 35CCC CCD is not allowed. And any deduction under chapter 6A is not available except three, that is 80JJAA, 80LA, and 80M. These three deduction can be claimed by the company. Now guys, lawmaker says that suppose if there is any brought forward losses due to this section or brought forward depreciation due to this three section, this all section, then guys, that you cannot set up and carry forward, means it is going to be lapse. What I'm saying that, try to understand, all people pay attention. If there is any brought forward losses or unabsorbed depreciation due to this section, then guys, that brought forward losses or unabsorbed depreciation you have to ignore, means it is going to be lapse. You cannot set up and carry forward. In simple word, I can say that, for an example, there is one domestic company, and domestic company is having the brought forward losses related to 35AD business. Suppose our company is having the two business, one is the coaching class business and one we were having one hotel. And suppose hotel is 2-star or above category and hotel related losses is there, and that losses was due to the 35AD section. So that losses we cannot set up now. If we have opted this section, then that losses will be ignored, that losses will be lapse. We cannot set up that losses. One more point, suppose in our unabsorbed depreciation there is an additional depreciation. In our unabsorbed depreciation, there is an additional depreciation, then that additional depreciation has to be ignored. That additional depreciation we cannot set up and carry forward. You got my point or not? Yes. One more point says that, okay guys, once this particular section is opted, then company has to opt this particular section for the future year also. But suppose in the future year, in any year, if company violated any condition and company has not satisfied this condition, then guys, company will come out from this section and again they cannot opt this particular section. So once company out from this section, then again they cannot opt this particular section for the lifetime. One more point says that, suppose this company wants to opt this particular beneficial section, then company has to file one form, that is form number 10 IC, up to the due date of return filing. Up to the due date of return filing of any year. Like suppose for an example, our company was incorporated in 2006 and that company wants to opt this section in the previous year 22-23, then whatever the due date of return filing of previous year 22-23, normally in case of company the due date of return filing will be 31st October of assessment year. So till 31st October of assessment year, company has to file one form, that is 10 IC, and company can opt this particular section. You got my point or not? Yes. Now next section is a 115 BAB, and 115 BAB is also very necessary section for your examination, because in examination in the first question of the PGBP, either you will get the question from the 115 BAB or you will get the question from the 115 BAA. Now 115 BAB is very interesting section. This section says that in case of the new domestic manufacturing company, just focus to my words. What I am saying, that new domestic and manufacturing company, there is a new domestic and manufacturing company. So in case of the new domestic manufacturing company, your tax rate will be only 15% tax rate. Only 15% is tax rate. Now question is that, sir, 15% is the effective? Answer is no. In 15% you have to add the surcharge at the rate 10% always, like 115 BAA. You have to add the 4% health and education cess. So effectively your tax rate will be 17.16% is tax rate. So in case of the new domestic manufacturing company, your tax rate will be the 17.16% effectively, or I can say that 15% is tax rate. But guys, there is a one condition that company should be engaged in the manufacturing business and company should be incorporated and set up on or after 1st October 2019, and that company should commence the manufacturing business till 31st March 2024. That manufacturing business should be commenced till 31st March 2024. Guys, earlier, like till last year, that date was 2023, and but in the by Finance Act 2022, they made one amendment and they have increased that benefit for the one more year, and they are saying that manufacturing business should be commenced till 31st March 2024. Now, sir, you are saying that tax rate is only 15%. If company opted this section, then tax rate is only 15%. But sir, what about the other income, other head income? Like this is for the manufacturing business income. Manufacturing business income tax rate is only 15%. What about the house property income or other sources income? Guys, for house property income or other sources income, that 15% benefit is not available. For house property or other sources income, your tax rate will be the 22%. Your tax rate will be 22%. Only for manufacturing business, your tax rate is 15%. For house property income as well as the other sources income and all, tax rate will be the 22%. But guys, here in this section, they have mentioned that while computing the income under that house property or other sources and all, any deduction is not allowed. Any deduction exemption is not allowed. It means gross income will be going to be taxable. Like house property, gross income is taxable, or other sources, gross income will be taxable. Like in house property, you know that the standard deduction 30% is available. Is that will be allowed? Answer is no, that will not be allowed if company followed section 115 BAB. Or guys, in case of the like other sources, like suppose company receive the dividend, then on dividend that interest expenses is allowed, that should be up to 20% of the dividend income. So is that deduction is allowed? Answer is no. Under house property, other sources and all, here gross income is going to be taxable. This was here, this is only this condition in this 115 BAB. Under 115 BAA there was no such type of the condition, but here this is the condition that your gross income is going to be taxable. Any deduction under section 24 or 57 and all, that is not allowed at all. Now, sir, you are saying that house property income, other sources income will be taxable at 22%. But what about the special rates of income? Like special rates of income, like LTCG 112A, STCG 111A, LTCG 112 winning and all, that special rates of income will be taxable as per a special rate only. But obviously, you have to add the 10% surcharge and 4% health and education cess. Now, guys, what about the short-term capital gain? Normally, you know that short-term capital gain is taxable as per the normal tax rate, because short-term capital gain 111A will be taxable at the rate 15%, but other short-term capital gain is going to be taxable as per the normal rate only. So what about the short-term capital gain? Here, lawmaker says that short-term capital gain on the transfer of the depreciable asset. If there is a short-term capital gain on the transfer of the depreciable asset, then that is going to be taxable at the rate 15%. Means short-term capital gain on the transfer of the depreciable asset, that is going to be taxable at the rate 15%, but short-term capital gain on the transfer of non-depreciable asset, that is taxable at the rate 22%. Why 15% on the depreciable asset short-term capital gain? Because guys, suppose there is a depreciable asset, you have claimed the depreciation. So depreciation you have claimed, so your manufacturing business income is reduced, means it means you have saved the 15% tax. So if you transfer that asset and there is a short-term capital gain, you have to pay the tax at the rate 15%. But suppose if there is a non-depreciable asset, then short-term capital gain is going to be taxable at the rate 22%. So in simple word, can I say that 15% tax rate is applicable only for the two type of income? One is the manufacturing business income, and second is your short-term capital gain on the transfer of the depreciable asset, and all other income will be taxable at the rate 22%. And guys, your special rates of tax income will be taxable as per special rates only. Now there is a 30% also. Now what is the meaning of that 30%? We will discuss later. Now one more point, if company opted this particular section now, then guys, MAT is not applicable. There is no question of the MAT. MAT is not applicable if company opted section 115 BAB. Now one more point, question is MAT credit. Guys, MAT credit, there is no question of MAT credit, because in the first year of the return, means when a company is a new, in this particular example, company is a new, in this particular section, company is a new, and company will file the first return. Now in the first return only, company has to opt this particular section. So obviously from first year only, MAT is not applicable. So there is no question of the MAT credit. One more point. Sir, if company opted this particular section now, then there are lots of conditions that company has to fulfill. First condition is company should be engaged in manufacturing business and that company should be set up and registered between 1st October 2019 and on or after 1st October 2019, and manufacturing business should be commenced up to 31st March 2024. Manufacturing business should be commenced till 31st March 2024. That is the first condition. Second condition, company should not be company should not be like that business should not be split up or reconstruction of your existing business. It means that business should be a new business. It should not be like internal reconstruction and all. Here that business should be a new business. That manufacturing business should be a new business. Third condition, whatever plant and machinery required by that company, that plant and machinery should be the new. Means plant and machinery should be the new, but there are two exceptional cases. One is the your 20% of the total plant and machinery, means out of the total plant and machinery, 20% plant and machinery can be the second hand. And second is a imported second hand plant and machinery will be treated as new only for the purpose of this section. What I am saying that normally your plant and machinery should be the new, means your all plant and machinery should be the new, but there are two exceptional cases. One is the like 20% can be a second hand plant and machinery, and third is whatever the imported second hand plant and machinery will be treated as new only for the purpose of this section. Now guys, there is a fourth condition. That fourth condition says that a company cannot use any building which was earlier used as a hotel or conventional center. Means company is not going to use any building which was earlier used as a hotel or convention center. That building is not allowed in this business. Now, one more condition, that company should be engaged in the manufacturing business. Means company should be engaged in manufacturing business as well as the research related to that business as well as the distribution of product produced by that company. So company should be engaged in only this activity. One is the manufacturing business, second is research and development related to that business, and third is that distribution of product produced by that company. Only that activity should be done by that company. Now guys, there are 5 exceptional cases. They are saying that this 5 business will not be treated as manufacturing business. First is the software development is not treated as manufacturing business. Mining business is not treated as manufacturing business. Conversion of marble blocks into the slabs or you can say tiles and all, that is not treated as manufacturing business. Bottling of gas into the cylinder, that is not treated as manufacturing business. And printing of books as well as the production of the movies, not treated as a manufacturing business. So what I am saying that all people pay attention. Computer software development is not a manufacturing. Software development not manufacturing. Mining is not a manufacturing. Conversion of marble blocks into the slabs or slice, that is not treated as manufacturing business. Bottling of gas into cylinder is not treated as manufacturing business. Printing of books and production of movies are not treated as manufacturing business. But always remember, if there is a power generating business now, that will be treated as manufacturing business. Here lawmakers clearly mention that if any person is engaged in the power generation, that will be treated as manufacturing business. One more point, next condition says that a company cannot claim this benefit. Company not allowed to claim the 10 AA benefit, additional depreciation, 33 AB, ABA and 35 scientific research related donation based deduction, 35 AD, 35 CCC, 35 CCD, and any deduction under chapter 6A is not available except 80 JJAA and 80 M. Means any deduction under chapter 6A is not available except 80 JJAA and 80 M. 80 JJAA and 80 M can be claimed by the company, but other deduction under chapter 6A is not available to the company. Now this section says that suppose if due to this particular section, if there is any brought forward losses or unabsorbed depreciation, that is not allowed to be set off. But guys, there will not be any question in the practical life, because in the first year only when company is opting 115 BAB, then from first year only company cannot claim this benefit of this section. Then obviously there is no question of unabsorbed depreciation or brought forward losses due to this section. But there can be a one case. Suppose for an example, we have started one company, that is BB Manufacturing Company, and new company, all conditions satisfied. Now after 4-5 years, suppose one another company merge with our company, means another company is amalgamated with our company, then can I say that company losses and unabsorbed depreciation we can set up and carry forward? Because in case of amalgamation, amalgamating company losses and amalgamating company unabsorbed depreciation can be carried forward and set up by the amalgamated company. But guys, here lawmaker says that suppose that amalgamating company is having the losses due to this section or unabsorbed depreciation due to this section, then that is not allowed to be set up and carry forward to our company. Now one more point. Guys, if any assessee wants to opt this particular section, now 115 BAB, then that assessee has to opt this section in the first return. Whenever that company will file the first return of income, before the due date of filing of return, they have to opt this particular section in the first return only. If in the first return they miss this section, then they cannot opt this particular section in future. You got my point or not? Yes. Now one more point. Suppose this provision is followed by the company opted this particular section and company paid the taxes at the rate 15%. Now in future there is a violation. In future, if there is a violation, then company will come out from this section, and again company is not eligible to opt this particular section. Now all people pay attention. Here lawmaker says that suppose company has violated condition number 3, 4 or 5. Now here condition number 3, 4 and 5. 3 was related to second-hand plant and machinery. There is a limit. Fourth is related to they cannot use any building which was used as hospital or hotel or convention center. Or fifth is that manufacturing business. Suppose if there is any violation of any condition out of this 3 condition, then company will come out from 115 BAB, but company have an option that company can opt the section 115 BAA. Means company can pay the taxes at the rate 22% instead of the 15% if there is a violation of condition mentioned under point number 3, 4 or 5. You got my point or not? Yes. Now one more point. Guys, always what company will do, you know that company will show the higher profit in higher profit when company is opting this particular section. I can take an example. Suppose I am a one shareholder and I am a common shareholder. We are having one company in the Mumbai, and in Mumbai company is paying the tax at the rate 25% or 30%. We have incorporated one new company in the Jaipur and started the manufacturing business in the Jaipur, and all the condition of 115 BAB is satisfied. Now what we will do, you know that we always try to increase the profit of the Jaipur company and we will try to decrease the profit of the Bombay company. Why it is? Because in the Jaipur company, tax rate is only 15%, but in the Bombay company, the tax rate is a 30% or 25%. So what we did, you know that we just book one purchase in the Mumbai company from the sales made in the by the Jaipur company, and we have, you know, that sale is made at very high value. So due to high value, what happened, that Jaipur company profit is increased, but they have to pay only tax at the rate 15%, but Mumbai company purchase is increased. It means profit is decreased and we have the save the taxes of 25% or 30%. So here lawmaker says that suppose in company who is opting section 115 BAB, if their profit is an extraordinary profit, if it is a normal profit, then there is no issue. But if there is any super profit or extraordinary profit, then here AO will check that. And on that super profit, extraordinary profit, AO will charge the tax at the rate 30% instead of the 15%. Means AO will charge the tax at the rate 30% instead of the 15%, and 30% plus 10% your surcharge and 4% health and education cess. So effectively it will be a 34.32%. So effectively on that profit, company is required to pay the tax at the rate 34.32%. You got my point or not? Yes. After that, I have given the comparison of 115 BAA and 115 BAB. Now just you have to read the comparison. Now guys, after doing this 115 BAA and 115 BAB, you have to check the 2-3 question given in the compact here. I have given one question that is related to the 115 BAB. Yeah, this question is related to 115 BAB, and along with that, guys, there are 2 questions in your compiler also. What you will do, just check the suggested answer of the May 2022 examination, and in the May 2022 examination, I think there was first question was related to 115 BAB, and in the December 2021 examination, there was one question related to the 115 BAA. So just you have to check that 2 question, and from that 2 question, you have to understand what is the application of the 115 BAB and 115 BAA. Now we are going to start with one more interesting section, that is the 115 BAC. But obviously 115 BAC they used to ask in the intermediate. Why? Because individual tax liability, individual assessment is already covered in the intermediate exam. So in CA final, mostly they will ask you question from the 115 BAA or 115 BAB, not from the 115 BAC, but from 115 BAC they can ask the small question either with the DTAA topic, double taxation avoidance agreement topic. They may ask the 115 BAC. Now next section is 115 BAC. 115 BAC says that in case of the individual and HUF, guys, there is a new taxation regime. And under new taxation regime, up to 2,50,000 there is no tax. 2,50,000 to 5 lakh 5%, 5 lakh to 7,50,000 10%, 750 to 10 lakh 15%, 10 to 1250 20%, 1250 to 15 25%, and more than 15 lakh your tax is 30%. Now this is the slab rate, or you can say that new taxation regime slab rate. But question is that this slab rate is applicable only in case of individual and HUF. Now sir, individual HUF resident or non-resident? Right answer is both. Suppose sir, individual is a senior citizen. or super senior citizen, then you know that, sir, in the last discussion in the normal tax rate, you have mentioned that in case of senior citizen, that basic exemption is 3 lakh or 5 lakh. So here also, is that basic exemption will be increased to 3 lakh or 5 lakh? Answer is no. If senior citizen or super senior citizen, if they are opting this particular section now, then basic exemption is 2,50,000 only. Here it will not be increased to 3 lakh or 5 lakh. You got my point or not? Yes. Now question is that what about the surcharge, sir? So surcharge will be applicable as a normal surcharge. Like if income is more than 50 lakh, then 10%, more than 1 crore, then 15%, 25%, 37%. Here there is no fixed surcharge. In the last two section, 115BAA and 115BAB, you know that there was a fixed 10% surcharge, but here there is no fixed surcharge that depends on the total income. Special rates of income will be taxable as per the special rates only. Special rates of income is taxable as per special rates only. But guys, if any individual or HUF this particular opted this particular section, a new taxation regime, then AMT is not applicable. AMT means alternate minimum tax. That alternate minimum tax topic is not applicable. But guys, if assessee follow this particular section now, then they have to surrender some benefit. Now, what type of benefit they have to surrender, we will discuss head-wise. One is the salary. Under the head salary, under section 16, you know that there are three type of the deduction. One is the standard deduction 50,000. That standard deduction 50,000 rupees is not applicable. After that, entertainment allowance deduction is available to the government employee. That entertainment allowance deduction is not available, as well as the professional tax deduction is available to assessee. That professional tax deduction is not available if assessee followed the new taxation regime. Under the head salary, you know that HRA exemption is there under section 1013A. That HRA exemption is not available. That 40% or 50% of salary or actual amount received or rent paid minus 10% of salary. There is a HRA exemption. That HRA exemption is not available. Third is that leave travel concession. Whenever employee along with the spouse and two children, you know that they visit for any place, and if payment is made by the employer, then there is some exemption like economic class fare and all. That LTC, leave travel concession, that leave travel concession exemption is not available. After that, guys, on the allowances, any exemption is not available. You know that on the allowances, there were certain exemption you have studied in your intermediate. That children hostel allowance 300 per month per child, maximum 2 child. Children education allowance 100 per month per child, maximum 2 child. Uniform allowance and all. So that allowances exemption is not available if assessee opted the new taxation regime. But there are four exceptional cases. That is the DTDC, means you can claim the DTDC exemption even you are opting the new taxation regime. Here first D means to Divyang employee. Divyang employee means to a handicapped employee. There is a commutation or transport allowance exemption is there, and that is 3,200 per month. Maximum 3,200 per month is exemption. That is transportation or commutation allowance. That exemption is allowed to the handicapped employee. That exemption is allowed even assessee followed the new section. One more point is a T. T means traveling on tour allowance. One is the D, that is the daily allowance, and C is a conveyance allowance. Now guys, in case of the traveling on tour allowance, daily allowance and conveyance allowance, whatever amount actually spent by the employee, that much amount is exempted. Whatever amount actually spent by the employee, that much is exempted. So guys, that exemption can be claimed even employee is opted with the 115 BAC. Even employee. So in simple word, I can say that under the head salary, that 50,000 is standard deduction not allowed. Entertainment allowance deduction to government employee not allowed. After that, and professional tax deduction not allowed. HRA exemption not allowed. LTC exemption not allowed. Any allowances exemption is not allowed, but there are four exceptions, that is DTDC. And here DTDC means D for Divyang employee is commutation allowance exemption. T means traveling on tour allowance. D means daily allowance, and C means conveyance allowance. That allowances exemption is available to the employee. You got my point or not? Yes. Now guys, always remember, in under the head house property, in case of the self-occupied property, you know that 30,000 or 2 lakh rupees, that interest deduction is allowed. That is not allowed. Means that under section 24B, in case of self-occupied property, that interest deduction is not allowed. But in case of the laid out property and deemed to be laid out property, that is LOP and DLOP, interest deduction you can claim. But guys, if there is a loss due to the LOP or DLOP, if there is a loss in LOP or DLOP, that losses cannot be set off against any other head. If there is under house property, if there is a loss, and that loss due to the interest under DLOP or LOP, that losses cannot be allowed to set off against any other head. So what I am saying, that first is in case of SOP, SOP means self-occupied property, interest deduction is not allowed. In case of LOP, DLOP, interest deduction is allowed. But under LOP, DLOP, if there is a loss, that losses cannot be set off against any other head of income. In the normal provision, what happened? You know that house property losses can be set off up to 2 lakh against any other head of income. But guys, here it is not allowed if assessee opted 115 BAC. You got my point or not? Yes. Now, next part is related to the PGBP. PGBP 10 AA SEZ not allowed, additional depreciation not allowed, 33 AB ABA not allowed, 35 that scientific research donation related deduction not allowed, 35 AD not allowed, and agriculture extension project not allowed. If you check the other sources, then other sources, you know that whenever minor child income is included in the income of parents, then parents can claim that 1500 exemption, that exemption under section 1032 not allowed. MP MLA, they can claim the exemption for the constituency allowance or daily allowance, that exemption is not allowed. Under section 57, family pension deduction is available, that deduction is not allowed. Family pension deduction is like 15,000 per annum or 1/3 of the family pension, that deduction is allowed under section 57, that is not allowed if assessee opted this section. Now, one more point is a deduction under chapter 6A is not allowed. Deduction under chapter 6A is not allowed. Any deduction under chapter 6A not allowed. Like ATC, ATD, ATDD, ATTTA, ATTTB, ATG, ATGGC, any deduction under chapter 6A not allowed. But there are two exceptions. One is the ATJJAA is allowed and ATCCD2 is allowed. ATCCD2 is like, you know that whenever employer made the contribution to the new pension scheme or central government pension scheme, then guys, on that central government pension scheme, whatever contribution made by employee can claim the deduction under section ATCCD2, and that deduction amount is 10% of the salary or contribution made by employer, whichever is lower. And instead of the 10%, there will be a 40% in case of the central government employee or a state government employee, then there will be a 14%. So that can be claimed by employee, but other than this two deduction, any deduction under chapter 6A not allowed. Now guys, if there is any brought forward losses or unabsorbed depreciation due to all this section, that brought forward losses or unabsorbed depreciation due to this section, that is not allowed to set up and carry forward. You got my point or not? Yes. Now one more point. Guys, can we decide every year that we have to opt the new taxation regime or old taxation regime? Answer is yes. At the time of filing of return, you have an option that either you can go with the old taxation regime, is existing taxation regime, or new taxation regime, that is 115 BAC. You have an option. Suppose in this year you have opted 115 BAC, next year you don't wish to opt 115 BAC, you can come out. Next year you can file the normal return. Again next year, again you want to opt the 115 BAC, you can do that. But guys, remember, if there is a PGBP income, if there is a PGBP income, business income, and if you opted 115 BAC, then you cannot come out from 115 BAC. But suppose if any condition is violated and you come out from 115 BAC, then again you cannot opt the 115 BAC till the time you are having the business income. Till the time you are having the business income, again you cannot opt the 115 BAC. You got my point or not? Yes. One more point. Guys, suppose for an example, in case of the employee, sir, employer will deduct the TDS as per existing provision or as per the new taxation regime. So that depends. If employee submitted one declaration to employer, then employer will deduct the TDS as per the new taxation regime. Otherwise, employer will deduct the TDS as per the old scheme, or you can say that the existing scheme. Now try to understand what happens. Suppose employer deducted TDS as per normal slab rate. But at the time of filing of return, employee realized that new taxation regime is more beneficial. So can employee can file the return as per new taxation regime or not? Answer is yes, he can do that. Or vice versa. For an example here, employer deducted the TDS as per 115 BAC. But at the time of filing of return, employee realized that existing system is more beneficial. So can employee file the return as per the existing system? Answer is yes. Is it possible? No problem at all. Now next section is 115 BAD. Guys, 115 BAD section, this section is exact replica of section 115 BAA. And under 115 BAA, we have discussed that domestic company tax rate is 22%. So same, it is a replica, but only difference is that was applicable for domestic company. It is applicable for the resident cooperative society. So resident cooperative society, you know that what was the tax rate of cooperative society? Up to 10,000, 10%, more than 10,000 to 20,000, 20%, more than 20,000, 30%. But resident cooperative society can pay the tax at the rate 22% plus 10% and plus 4%. And guys, if resident cooperative society opted section 115 BAD, then AMT is not applicable, that alternate minimum tax is not applicable. All other provisions are similar to section 115 BAA. You got my point or not? Yes. Now guys, always remember, Whenever assessee opted section 115BA or BAA or BAB or BAC or BAD, then maximum depreciation is allowed at the rate 40%. Means maximum depreciation allowed at the rate 40%. It means maximum depreciation allowed at the rate 40% means maximum depreciation you can claim the 40. Obviously, additional depreciation is not allowed, and maximum depreciation you can claim the 40%. But you will say that, sir, anyway, maximum depreciation is 40% only now. No, guys, you know that we have discussed that motor vehicle acquired and put to use between 23rd August 2019 till 31st March 2020, then your normal depreciation was, instead of 15%, it was 30%, and hiring business it was 45% instead of 30%. So that 45% is not allowed here. Maximum depreciation can be claimed as 40%. You got my point or not? Yes. So this is the completion of the some special rates of tax, that is 115B, AA, BAB, BAC and BAD. Now next section is very simple. 115BB. 115BB is related to the winning from the lottery, card game, horse races. Winning income is going to be taxable at the rate 30%. Now section 115BBE is related to the deemed income under section 68 to 69D. That is related to the cash credit or unexplained expenditure and all. Suppose in your account you got some cash and you are not able to explain the source of that income, then it is going to be taxable under section 115BBE, and that is taxable at the rate 30% plus 25% surcharge plus 4% health and education cess. So effective tax rate will be the 78%. Now guys, try to understand against this winning income as well as the 115BBE income, like any losses you cannot set up. Against this income you cannot set off the any other losses, as well as any expenditure is not allowed, means gross income are going to be taxable under this section. One more point is 115BBF. 115BBF says that if you receive any royalty on the patent and that patent is developed in India, then you have an option that you can pay the tax at the rate 10% on that royalty income. Normally royalty income is taxable as per the normal rate, but you have an option that assessee can opt the 115BBF and they can pay the tax at the rate 10%. But guys, there are certain conditions. First condition is that patent should be developed in India, and developed means whatever expenditure incurred on that patent, at least 75% development expenditure should be incurred in India. Second condition is that assessee should be the resident in India. Assessee should be the resident person in India and he has invented that patent in India and patent is registered in the Patent Act 1970. Then only this section is applicable. One more point, that gross royalty income will be taxable, means against that any expenditure is not allowed, as well as that you know that 80 QQB RRB, there was the deduction 80, I think RRB against patent, that is not allowed, means gross royalty will be taxable at the rate 10%. One more point, if assessee wants to opt this particular section now, then up to the due date of return filing, assessee has to opt this option and they have to give one declaration and they have to opt this particular section up to the due date of return filing. One more point, suppose assessee opted this section 115BBF and paid the taxes at the rate 10%, then guys, for the next 5 years they have to opt this section. But suppose in the next 5 years, in any year there is a violation, then in the year of violation and next 5 years, that assessee is not eligible to opt this particular section. You got my point or not? Yes. Now next section is 115BBG. 115BBG is related to income from transfer of the carbon credit. If any person transfer the carbon credit, then that income is taxable at the rate 10%, and guys, that income is taxable on the gross basis. Gross basis it is taxable at the rate 10%. Guys, other all special rates of income we already covered in the respective topic, like capital gain income is we have covered in the capital gain. In trust topic we also discussed some trust related concept and all that we already covered in the separate topic. Now there are some notes and these notes are applicable for the above section. Above section means here 115BB, after that 115BBE, after that 115BBF, after that 115BBG for special rates. Guys, for special rate, always remember this special rates are income taxable on gross basis. Gross basis means any deduction under section 28 to 44C or 57 is not allowed. One more point, deduction under chapter 6A is not available, as well as the basic exemption benefit is also not available, but there are certain exception, and that exception is, you know that in case of the resident individual and HUF, if your balance income is less than basic exemption, then unexhausted basic exemption you can utilize against long-term capital gain as well as the long-term capital gain as well as the short-term capital gain 111A. So long-term capital gain 112A or long-term capital gain 112 or short-term capital gain 111A, against this three income you can utilize the unexhausted or unutilized basic exemption, but that is available only in case of the resident individual and HUF. So this is completion of your first topic, that is the tax rate for your examination, that is assessment year 23-24. So just you have to listen this revision lecture at least for the 10 times, so till examination you can remember all the provision and you can do well in your examination. Guys, for your examination only like limited days are remaining, only March and April. Now Feb is like, you know, that already we are in the mid of the Feb, so only March and April, 2 months remaining for your examination. I just want that you should focus to your examination. And now you have only one work, that is you have to study. Don't see here and there, don't waste your time on all social media and all other activity and all. Just you have to focus to your examination. Okay, so thanks a lot people, that's enough for today from my side. See you in the next revision lecture. Bye, take care.